Well, good day, all. Ira Epstein, and here we go with your financial market wrap-up. This is your weekend edition, so we'll be looking at the weekly charts on this Friday, the 14th of July, 2023. Now, I'll be out this week, so for a number of these that I put out during the week, my beautiful picture of me right here won't be in them. I'll cover the markets, do it a little different, and we'll work it from that direction. There's not much I can do. I'm going to be out of town for a week or so. It keeps coming to mind. Elevator. We got the shaft. Remember that as a kid? They'd sing it at all the high school games and all. Well, that's what happened to the shorts in the markets since the jobs report. The market just took it on up and away you go. And then I go, elevator. Who got the shaft? Or we got the shaft. And what else? What about the earnings that are supposed to be so bad? The ones that came out started with the banks. Looks pretty solid to me for the big boys. The smaller banks are going to have issues because money moved from them. So I would assume they're not going to earn the type of interest on their money. And we saw that already with State Street that you're going to get with the JP Morgan, a Citibank, Wells Fargo reported. We'll see Bank of America probably followed in very good suit also. So we can see what's happening there. We've had vertical price rises, and vertical rises lead to corrections. Just remember that. They either go up and consolidate or they come down on you. So let's see what we've got in these markets. We're getting very close to the old high of 47.58. You're 200 points away. In the parlance of S&P, that's not very far. You can see how the market keeps climbing up here. We're nowhere near on a closing basis the old highs we got yet. 200 points away. On a closing basis, different than spikes. When I look at the chart action, higher highs, higher lows, still very bullish. No change there. You had a bullish crossover. I prepped you for this last time. So let's take a look and see what that means. If I walk you right over here, you have the 18-day average under the 100. When you get a crossover, what typically happens, and this was last week when you have it, the market tries to go and make a higher high before it comes back down to challenge that number. So classic what I teach in my charting course. If you haven't seen my charting course, go to iraepstein.com and under education, they're all there. Educate yourself. Now, where would the next resistance point be in the chart? The Bollinger Band, 45.59. We got up to 45.60 and a half. So if you're going to come to a zone where you're going to see some profit taking, you hit it again. You had hit it up here, you backed off, the traders might have bought again, and now you're there. And during this whole process, you've kept the embedded slow stochastic. Now, this is a key. If you haven't learned what this means, my enhanced Bollinger Band course will teach it to you in a Saturday or a Sunday. It's 13 video chapters. At the end of this, I'll have that up there, okay? So we'll bring the add-on so you can work with that. In the Dow Jones, we have higher lows, higher highs, but overbought, different. Why is the Dow up today? And we saw some corrections down in the S&P, the NASDAQ, the Russell. The Dow's 30 stocks. What big bank is in that? JP Morgan. They carried the day. That's basically what happened. In the NASDAQ, up here, beautiful. Look at how high, you're all the way up. This is still the NVIDIA, but NVIDIA today, by the way, went from 480 into the 450s. So a correction finally hit NVIDIA where it made a new high for the move and finally saw some money come out of it. In the Russell, the way if you were sitting next to me, I'd be giving you the elbow in the side. This is where you're supposed to come out of the markets. You're hitting the 100-week average and the upper Bollinger Band. Bye-bye. Take some money off the table. In the bonds, this is the short covering area. You heard what I said, short covering. Why? Upper band, you rarely stay over it. Lower band, rarely stay under it. Take a look. Let me turn over here. Take a look. So you get down to that band, you come out. Now, the longer we go sideways, the bigger an eventual move. I want to stick my neck out. It's going to break out to the upside over time. We're going to see yields fall and fall and fall over time. We're not there yet. I'm giving you what I think is going to happen. The words over time, you watch. In the 10-year notes, we're still very much in the bear camp. You have to get back over through here, 113.16 and a half. The resistance should be here, but last week was the short cover area, and this week you're up 1 in 28 points. That's almost $2,000 on a futures contract. So the first time you hit the band, that's it. First time you hit the band, come out. First time you hit the band. How much do I have to hit you on the head to show you that certain of these things you try to go with? Does it have to work every time? No. You're not going short at the top and you're not going long. If you're long, you're taking money off. If you're short, you're taking money off on the way down. Same thing in here. Now here's a breakout. You got under the Bollinger Band, but you're oversold. So first move under the 100-day average. Can it stay under it? That's the first question. To me, I'm looking to go short on a good rally. Will I get it is going to be the big question. And on the euro, the question is, can I get a good break to buy it? Why? Euro makes up 40% of the dollar index, so understand they're like a mirror flipped on each other. In the Canadian dollar, no. This is a big resistance zone. I get people calling me, Ira, is that going to move? No, this is where the pros are coming out, in my opinion. Does not mean I'm right. But that's what I would think. You hit the bands, pros take money off, you're not embedded there. And in the end, we've had a bear market rally. Sooner rather than later, it'll probably run out of steam here and start resuming its way down. I think next week we have the Bank of Japan meet and we're going to get some words from their monetary policy again. I'll be gone, but I'm pretty sure that I'm right on the timing. In Bitcoin, so you got a little bit lucky here. Ripple won a big event. Now, whether it stays that way, I don't know, because I'm sure the SEC is sitting back and probably thinking about appealing. This wouldn't surprise me. But I've explained it. I'm not going to do it again here, and that carried it. But all of a sudden, by weekend, the market's starting to take profits on this. In the energy market, you're still stuck. You can't seem to get over the 18-week average of closes. The daily Brents are bullish, but if one were a buyer at 77.60, do you really want to put a stop under 71.40? I don't think so. If it keeps going up, though, momentum could carry to the upper Bollinger Band near the 80 level. In WTI, this has been stronger than Brent. And it's certainly 2 weeks in a row over that 18-week average. But here, too, understand, it's nice to talk weekly charts so you're prepared for the risk. If one were to buy it at 73.22 and put a stop under the most recent low, again, lots of thousands of dollars at risk. Gasoline, while you look so good on the daily charts, you don't look that way on the weekly. You still have a pattern here where you're fighting battles with a higher high, lower low, all against the 18 up to the 100-day average of closes. So you put it together, you got a battleground in these markets. What do you do with them? Well, you learn. And especially as you're hitting all these Bollinger Bands. Take a look at this, take a moment out, learn. You can move your cursor up to the top here. It'll take you right to the education section on our website. That's how you do it. It'll run right through the ad as well. You have a good day. I'll see you all. I will be putting out updates, by the way, during the week, even when I'm gone. But as I said, this beautiful face won't be there. Take care. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, If you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.